Hello and welcome back to a special edition of 51% Attack. We're going to be moving fast today because I don't have a ton of time and I have even less time with a quiet home. So we're just going to move. Today was going to talk about the results of the LCB. Probably let's do that in like 10 seconds. It worked. It was disappointing. We didn't account for the ETH BTC ratio underperforming since the LCB, which was on, I'll show you in a sec, it was on March 9th. It was teasing us the entire time. We followed it, and then we finally got it on March 9th. If you followed it, if you were to buy in when the signal fired, because it was a weekly signal, so it printed on the March 2nd candle, but because it's a weekly, we saw it on March 9th, a week later. If you bought here on March 9th, over the course of the Living Cat bounce, you made somewhere between 30 and 38% on ETH. It may have just been a flat 30%. In any case, it worked, but was pretty disappointing. So, the signals work. Can't always account for what the ratio is going to do, especially in a year when monetary policy is very restricted. So that's the LCB. It worked. The indicators still work. We just couldn't account for the ratio because the indicator doesn't track the ratio. In any case, we're going to talk about something much more exciting, which is the end of the bear via the crypto spring indicator, or the CSI. Like I said, I'm going to move pretty quickly. I'm going to show you how it's happened the past few cycles. It's broken down into three sort of distinct phases. One of them is proprietary, the earlier one, and then the other two I will show you how they are derived. It's not terribly complicated, but feel free to pause or rewind because I'm probably going to mumble. I'm going fast. I want to take advantage of this quiet hour. Let me turn our volume. Here we go. There's my son in the background. Okay. Yeah. Pause for a second. Okay. Here we go. So let's go back to 2014, 2015. Let's take a look at what that cycle looked like. I'm not going to 2010, 2011. You know how it is from the last video. Too much wild west. Okay, so as you're seeing here is the crypto spring indicator. It is the white dotted line. There's also, it's sort of an amalgam of three separate places. One is the indicator itself, which is mine, that I believe we can get a week to possibly even 2 weeks earlier than other more common indicators. This one here, I'll show you where it's derived. This is from the super trend. Other analysts will use things like MVRV Z-score turning around and so on and so forth. But for all intents and purposes today, we have three phases. One is the crypto spring indicator. I guess call it part 1, part 2, and part 3. Let's just do that. Part 1 is mine. I'm not showing you how it's derived. Like I said, I got to hang on to some secrets, but it does always work. And so here's what happens after it fires. We can actually go down to the daily scale. It's that accurate. So we're going to go to, October 5th of 2015. Let's go way back in time. So it fires off. It still requires the daily candle, so it would have been at the end of this day, which was a big not a big green day, but a green day, 2%. What happens after that? You can see I've sort of made a note here. This is back when I was first working on it, and I put early long potential. So once the CSI fires, it does basically herald the start of the bull market. That doesn't mean you can't revisit the lows, but in general, what I've been saying is that once the spring indicator fires, the bottom is in. It never goes lower than that price from the bear cycle again. And you can see, once the white line here fired off, we had, you can argue where the double bottom was. It was either 165 or 162. But in any case, it never goes back there. I could zoom out. I don't have to tell you. Bitcoin never goes that low again. It doesn't even do it during the crypto spring phase. There will be examples where it does, so hang on. But generally speaking, once the indicator fires off, bottom's in. It doesn't nail the bottom. That's not what the indicator is designed to do. There's other things you can take guesses on to do that. but the indicator says the bottom is in, and the worst case scenario is that we revisit that number. So potentially, for example, Bitcoin could have gone back down to 160 here. It didn't, and I'll show you the math behind that. So once the indicator fired off, again, the white line, the earliest part of the indicator, part one, it had a max drawdown of minus 2%. So after that, I think it had 2 red days. It had 1.36, 1.4. So I was estimating, but if you can zoom out as far as you want, it's just straight up from there. So, when we announce or when we say that the indicator has fired off, I don't want people saying, "Oh, how come we had a red day? Oh no, we're down. You're a failure." No, there can be drawdowns after it. There are worse ones than this, but it's not going to touch. The bottom is in. It's not going to go below here. 160. So it had a 2% drawdown, and then it just kind of kept going. And we'll talk about once we talk about the 3 parts of the indicator. I'll talk about the targets for the indicator. One sec. Hey, bud. Yeah. Oh, you're sleepy. Yeah. I know everybody's sleepy. It's a bear market. It's winter. Okay. Child taken care of. So that's part 1. And as you can see, if you get in this early, it gets more pronounced later in other cycles, but you do catch moves like, this one here, which is, 2%, nothing too shabby. You do get like an extra 2% or something like that. Like I said, it gets more pronounced down the line. So, that's part 1. Part 2, this one is... I don't know why I had the MAs in there, but we'll get rid of those. So this one comes from the super trend, the daily super trend. And it's that after you've entered phase 3 of winter, once you get above the daily super trend and flip it green for the first time since late winter, so it's a very specific point, that's also a really fantastic indicator that the bull market has started. There's a potential to miss some early gains. They're pretty minor here back in 2015, but it is another example of it happening. And I'm just going to zoom forward. Actually, let me finish up with these 3 parts of the indicator, and then I'll show you how it shows up in other cycles repeatedly. So again, this one's based on the daily super trend. Once it gets above the line for the first time, it's up and up and up and up and up and up. There's drawdowns, but for the most part, the bull market has started. The last one is going to be based on this one's very, very late, and it's very silly. It's almost not really part of the crypto spring indicator. This is what I would call very late entry, or at least in my case, I would stop major accumulations by this point. Once you've reached here, because it has doubled by this point, the Bitcoin price in 2015. For this one, we're going to go to the weekly. This one's, again, there's very little science behind this one. It's very simply, it's a long signal, in fact, on this one. It's just when the 20-week EMA goes back above the 50-week EMA, again, after phase 3 late winter has started. So it has to happen during a specific time of year or specific time of the cycle. And that's all it is. But it's still works as an indicator. It's basically the start of it's a late confirmation. The bull market is starting. You're about 2 months behind, but what's 2 months in the grand scheme of things? The only thing is that I wouldn't do major, dump your life savings accumulations at this point anymore. At least I'm not going to be. Because you have missed potentially, like 100%. In this case, okay. This case it was about 80%, but you know what I mean. From the bottom, 140%. From the crypto spring indicator, 60%. It's a pretty big jump. If you're longing, of course, that's fine. You can long there if that's your appetite. But for the most part, during this would be the final accumulation phase for me. For example, if we see another one of these where you get this late long indicator, the late bull indicator. I know it's a late bull indicator, some accumulation, and then up after that. Maybe that's what I'll call it, is the final accumulation stage. So hardly a part of the spring indicator, which the first 2 instances are over here, but it is something to look at. Okay, let's go forward to 2018, where everything plays out again. So down to the daily, so I can show you my own indicator. That's 2022. That's COVID. It also worked in COVID. So this one was a little frustrating because not frustrating. Sorry, that's not the right word to say. What caused the indicator in 2018, which was calendar year February 2019, what caused it was a massive green candle. So yes, you're missing 8% off the bottom, or a little bit more. There's nothing you can do about it. Are you going to really care about that in 3 years when we're at the cycle top? No. But I know it's a little tough to look at where you're like, oh man, I wish there was a way to, tell that, the indicator was going to fire off here. Sorry. That's not what it's for. But guess what? Once the indicator fired off, it never went back below these lows. The low of 2018 was 3120 for Bitcoin, and it would never go back there. Even in COVID. So again, bottom is in. That's what the indicator's about. You can feel pretty confident that, let's say it was to, slope back down and go down to 3120. It's a really great place to accumulate or even long at that point for me. So there's the indicator there. Here is the part 2 of the indicator, which is again based on the super trend. And you can see this is a tough one. It got close, but as long as you follow the rules, it does happen. So we entered phase 3 winter. I don't remember the exact date. Somewhere over here. Phase 3 winter. It has to flip out of red to green. Okay, it couldn't have started in green, but it went to red here. As funny enough as the first indicator fired off, then it flipped to green, and look at that. There's a drawdown. There's a drawdown for sure. This is a nasty day as it reached the 20, so that's something that we're gonna have to keep an eye on. But for the most part. It simply, the bottom was in. After this point, again, never even revisited 3120. So that's another sort of part 2. If you don't trust my proprietary, Colonel Sanders herbs and spices indicator, then just a week later, you haven't missed very much. You've missed, 13%, but then it also came back down 9%. So, I know, little guy. This is boring numbers. Okay. Hopefully this video is adding to the realism. I am a human being. There is stuff in the background. Okay, so after this part 2 of the indicator, again, a really good place to enter. The bottom was in, and it was up only for the rest of crypto's life from that point, even including COVID. And lastly, we'll zoom out to the weekly again. We'll take a look at 2018, and you can see where if you wait for the late indicator, this is way down the line. Way down the line. This is like what, three, almost 3.5 months later. But to my point, it's like, it's not something to be disappointed that you've missed this necessarily, especially if your appetite for longs and leverage isn't a thing. That's totally fine. But I would say this is probably the last place where I would do like major accumulation. And look, again, you do get a long, including COVID, you have a long time to accumulate here. So, consider this like an final accumulation signal if that helps. But this is the late part of the indicator where, again, the 20 EMA went above the 50. And that was it. Bull market was on. I know COVID sucks, and it got another drawdown, but we never went to the bottom. So again, the indicators worked. This is another really interesting one. I'll just do this very fast, which is that. So I came up with the indicator was developed in the 2018 bear market. So it wasn't tested here. I'm not going to call it that. So it was developed from 2014 and 2018. Those were back tests. It was first ever tested, and I didn't know it until we were already in this sort of, like, we had already had the plunge. I wasn't looking for these sort of metrics back then. But I did notice, I was like, oh, hey, I wonder if this is going to play out. And lo and behold, the spring indicator fired off here on April 18th, which was, way, way, way after the bottom. You've missed, an 84% jump. But I think given what happened during COVID, we would have been fine with that. And hey, it did in fact mark the bottom. Bitcoin has never, ever gone to 3,900 again. I don't know what the blue line is. I'm gonna do a video like deleting all my old lines because I want to do that live so people don't think I'm cheating, but I'm not doing that today because we have limited time. Okay, 2022. Okay, we are in late winter here. We enter late winter. We are on the daily, so this is where the CSI would have fired off. The low for 2018 was what, like 15.5, 15.4, somewhere around there. CSI fired off here on December 1st. There was some drawdown. It had a 4% max drawdown. Bitcoin had a 4% max drawdown. You know, if you buy right in here at the indicator, look, there's a 4%, 5% drawdown. Oh no, but guess what? Bottom was in yet again. Never went to 15.5. Never went to it since. Maybe we go to it in some kind of secular bear market, but that's not for discussion today. So that was where the indicator fired off. And if you weathered that drawdown and maybe you didn't long immediately, even if you did long immediately, but you know, I'm not going to talk about risk appetite for longs on a 4% drawdown. That can be nasty for sure. I'm not trying to diminish it. But if you just buy in here, if you were to buy in here on the indicator, you're catching just enormous moves in the subsequent months. In 3 months, you know, you're up 60%, 70%, 60% in 3 months, sorry. And we'll talk about the target in a second because it's pretty easy to discern. But without a long, you know, you have a pretty good, 70 to 80% jump there. So that was really nice when that CSI fired off. Here is the part 2, as we're calling it, which is when the super trend flipped. So it was quite a bit down the line, but honestly, you didn't miss very much. In fact, you missed almost nothing. So, it calls into question, like, how much are you gaining on going in on the indicator versus the super trend? Here, maybe 10%. That can matter to some people, but, risk-wise, it's a little bit more. Oh my goodness, going through this before everybody loses it behind me. Okay, so there's the super trend, and once the super trend part 2 hit, I mean, it's gonzo. There's actually zero drawdown after the super trend, and we entered the bull market, and it was straight up for years and years and years. Last thing, we'll look at the late indicator of 2022. Here's the 20 going above the 50. This occurred, so if you wait for the late to even get into any position, you have missed the initial, 65, 70%, which is substantial for sure. But again, if you're just doing accumulation and you want to be safe, there's nothing wrong with waiting for this. It's a great time to accumulate before the bull really kicks off. And if you do wait for that, here, let's just quickly, let's say if you buy in at the CSI, by the time you get to the top in October, it's what, 640%, something like that. If you wait for the long signal here, 640, it's 360%. So, there's a doubling in there, which mathematically we just saw. Here's a doubling from the CSI to the long signal. So yeah, you missed one doubling. Whether or not you want to take advantage of that is up to you and your risk appetite. Always manage it. Okay. So that is Bitcoin. I should have transmuted these onto the ETH graph. Yes, I did. Okay, so what does ETH do from the CSI? It's a lot tougher. For sure, the drawdowns are bigger because ETH has higher beta. But here's the CSI. It still works, but the drawdowns are tough. So if you buy in from the indicator in 2022, you do have a drawdown of maximum 11%, closing 10%. However, the bottom is still in. We'll take 1 second. Hey, little guy. I know. We're going fast. We're going quick. There you go. Yeah. Dad's doing boring numbers. Okay. So ETH, nastier drawdown, indicator still works. And of course the payoff is a lot more because if you go from the 2022 CSI to ETH top, you actually end up with, where is it? Let's just go from the bottom candle there. So, you get that 312% move compared to when you get the long signal, it's like 150%. So as we know, last cycle was pretty disappointing. When you start cutting it in half for ETH during a restrictive policy, a monetary policy cycle, those kinds of things, these indicators matter. Okay, so let's go back quickly to 2018, which is when ETH. Okay, there's technically one more, but 2018, the CSI fired off on a big green candle. So unfortunately, you do miss a 14% move. Waiting for it, it's substantial, but hey, bottom was in. The bottom for 2018, 2019 was $100. Oh no, I'm sorry. It was over here in December. Yikes. The bottom was like $82. Once the CSI fired off, never saw it again. And that was that. We had some scares for sure. But But even here, like during COVID, hit like 88, 87, 88. By all rights, indicator still worked. And you had a pretty good confidence interval here of being like, wow, we're right down at the 2018 bottom. The indicator, we got the spring indicator. We know we're in a bull market. Time to go big here, potentially, and accumulate at 88. So the signal fired there, and there was no major drawdown. Okay, there was no major drawdown for ETH, with the exception of the global pandemic. Okay, so, asterisk on that one. And then lastly, for fun, here, ETH had technically launched, launched in July 2015. So there is technically a spring indicator to put here on ETH. It technically still worked if you count some of these wicks. I'm joking if you can't tell, but yeah. So ETH never went back to 15 cents. And I'll just leave it at that. Okay, so back to Bitcoin, which is what we'll actually use to track this. I have high hopes for the ratio this upcoming cycle, as I've talked about. So I don't think that ETH is going to disappoint for that much longer. However, these indicators are Bitcoin based, so we do need to talk about them in Bitcoin terms. So what are the targets after the spring indicator fires? There's a very clear one you guys will like. Okay, back after a brief intermission. Yeah, I got completely lost in my chart. So it is based on the weekly. It's based on the weekly super trend. Sorry if that makes you doubt me, but this is what I was trying to get to. So once the spring indicator fires off, the best play, if you are longing, like I'm planning on, entering some leverage longs, either on the spring indicator or between the spring and super trend indicator, daily super trend, the target would be the weekly super trend, which here doesn't look so impressive, right? You're like, wait, it's just above it. But even here, it was like 30%, but I'll show you why it matters more down the line. Because it's not like I'm not selling, once we hit the weekly super trend, but I would probably ease off on the longs because this is where some turbulence starts to hit. 2014, it doesn't look so bad. The rise doesn't look so great, and the turbulence doesn't look so bad, but just hang on a beat as I show you. So here's where, right after the indicators fire off, it goes right to the weekly super trend, and then at the very least, it becomes a pivot, battleground. Let's zoom forward to 2018. You can see the same exact move, and whoa, that's a lot bigger. There's a 26% weekly candle. That's, what we like to call the God candle. And you would catch that, whether you went in on the spring indicator or a little bit later on the, part 2 of it. You're catching this candle. It goes right to the weekly super trend, and it hits some turbulence. So this is where I would ease off of my longs. It's still a bull market, still goes straight up and yada, yada, yada. But for this very first move coming out of the spring indicator, weekly super trend. That's where it went here before, hitting some turbulence. And lastly, here, that's COVID. Although it also works there, but it's a little different. I don't know. Still works. It went right to the super trend. But we're not talking about that. We're moving fast. Here we go. 2022. We come out of the spring indicator. If you waited for the super trend one, which there's nothing wrong with it, but you do miss a lot of the move, even though it still goes to the weekly super trend. In fact, it goes quite a bit above it. It goes like 5-6% above it. Yeah, 7%. If you go on the spring indicator, you catch the whole move. If you go on the super trend, you'll probably miss a little bit of it. But again, goes right to the weekly super trend and hits some turbulence, or at the very least, consolidates. Not too bad. But this is where I would ease off longs because you want to avoid something like this, which is a, icky little candle. That's minus 12%. That's a lot of your gains gone if you get liquidated. So I would ease off of longs once we hit the weekly super trend. But again, you can see indicator, weekly super trend. Where does that put us today? So no indicators yet. No crypto spring indicator, part 1. No part 2. The daily super trend is still way up here at 66, although you can reach it fast. However, once the spring indicator goes off, look where the weekly's at. It's all the way up here at 82K. Like, it's dropping. It's going to drop probably further before the indicator fires off, but it's not going down that fast. It's going down like, 3K per move? So, let's say it goes even another 3K. You're looking at potentially a jump of like, where's 79K? Probably in the realm of like one of those like 20 to 25% moves again. Like I'm not guaranteeing anything, but like that's what's possible based on where the chart is. If we were to get the spring indicator, phase 3 has lasted, 10 days, 17 days, and a maximum of like 48 days back in the 2014 bear market. We're already 25 days into phase 3. we're already more than halfway through historically. If we are, here for only another like 25 days, where could this thing go? It's, or where could the weekly super trend be at? This could be a 20 to 25% jump again to kick off the bull market. That's a really nice move to catch, especially if you're leveraged. But even if not, if you're accumulating, it probably just feels really good. So that's what we're looking at. We're gonna ease off once Bitcoin hits the weekly super trend. We've seen it work in 3-4 cycles now, 3.5 if you count COVID, and that's gonna be my target. Some last caveats before we wrap up for the day is that we talked about how there's drawdowns. There are drawdowns after the indicator. Bitcoin had a -2, then it had a 0%, and then it had a -4%. So after the indicator, I don't want to hear people angry about there being a drawdown. It happens. It just means the bottom is in. Hell, you could revisit the bottom. This thing could clang. Like, let's say we get the indicator now. Let's say that 58K? Let's say 58K holds. This thing, blahs around. Hell, or I'm expecting 54K to be honest. But let's say we go to 54K, then the indicator fires off and goes up to the weekly super trend. As far as I'm concerned, it could still turn around on some, I don't know, if market makers want to sell a little bit more, if there's a narrative, it could still come back down to 54K. And as long as it doesn't go below, the indicator has worked yet again. So, I'm not saying, I don't want to call this the up-only indicator because it could grind around. You've seen it happen. This has been a really bad cycle, so it could exacerbate these very moves that we're seeing here in 2022, where this was a grind. It wasn't up only from December. It was up only from like a month and a half later. And even then there was turbulence. So, it can grind around after the indicator. But obviously I have statistical and probabilistic confidence that it won't go back below wherever the bottom is once the indicator has fired off. Currently it's 58K. If we go to 54K like I'm expecting, I would imagine that holds as well, provided the spring indicator has fired off. So there can be a grind at the indicator. It's not necessarily hashtag up only, but the bottom will be in probabilistically. Last things. I want to show ETH, because ETH also follows the weekly super trend theory. In fact, it goes a little bit above it. So out of the indicator, Ethereum had a tougher drawdown, as we talked about, but it goes far enough above the weekly super trend to, I think, make up for it, especially if that's your instrument of choice for leverage longs or accumulating. Here it is, comes out of the indicator, and a little bit of chop, as we talked about, some grind, chop and grind, pop and lock, but it does go to the weekly super trend. This is a great place, in my opinion, again, to ease off of any leverage longs, because look, you hit turbulence, you get some of this action back here, some grind down. I think I would probably reevaluate. I have some other things to talk about. Like once this all happens, once the indicators come out, once we hit the weekly super trend, I do have more stuff that talks about what flips the bull market into sort of more of an up-only mode. We're going to save that for later because I'm time constrained. But you can see ETH went to the weekly super trend and in fact went about a nice 15% above it. Really great place to scale out of longs. And I think that also makes up a little bit for some of the underperformance that you see from ETH. The additional drawdown here sort of gets made up for a little bit in these stretches above the weekly super trend. Going back to 2018, same deal. You get the spring indicator. ETH, much like Bitcoin, Ethereum has 0% drawdown from that point. I'm not guaranteeing that. I'm just saying it's a possibility. No drawdown. And, it goes to the weekly super trend. And in fact, it goes way above it. I would be scaling out of my long well before this. This is like what? 40% on closing basis, 70% on a high. That's crazy. We should not be expecting that. But just to say that's what's possible. And so now, let's take a look where the indicator is. Let's say, if the Ethereum bottom holds now, it's like 1,500. I'm not expecting it to hold, but based on current action. But let's say it holds. The super trend is up here at what, 2,400, I think? Almost 2,500. So you're looking at 56% just for like the basic going to the super trend. It'll probably lower a bit. It'll probably end up around like 2,300 is my guess. 2,250, 2,300. Still, that's like 45, 50%. And if it goes above it like last cycle, even when the ratio is disappointing, add 15% on it, you're right back to a 60% gain. Again, nothing guaranteed. I'm not saying this is going to happen, but like these are possible targets. Very possible based on what I just showed you. Even in a disappointing cycle, it's likely to go to the weekly super trend, which is 45 to 50% jump on its own if it doesn't outperform at all. Pretty damn good if you ask me. Gosh, I think that's all I wanted to talk about. I need to edit this together because I made 2 different files. What else? Oh, where could Ethereum go if Bitcoin drops another, 10%? I would hope the ratio, I don't want to get into ratio talk again. I think the ratio is in exhaustion mode. I know it wasn't as exhausted as I wanted it to be. I thought 272 was going to hold, or 28 to 272 was going to hold. It didn't, and it has formed a pivot. However, my base case is still the same. The ratio looks great. RSI is exhausted. It's putting in bull divs. It's turning around on the monthly. I still think this cycle will be good for the ratio. However, even if the ratio holds up, and if Bitcoin drops 10%, ETH would drop into those 1400s, which really sucks. But them's the berries, right? If we get the indicator there, I'm still going to look to accumulate and leverage long, and knowing that ETH probabilistically won't go back below 1400. And wouldn't that be poetry? It would stay above the 2025 low down here at like 1385, I want to say. Yeah, 1385 was the cycle low. Maybe the indicator protects us from that. Maybe we end up at 1390 on a tough day with Bitcoin dropping to its final destination. If that were to first of all, I'm not basing these indicators on Ethereum already. So if we lose 1385, I'm not going to lose any sleep over it. And you guys can yell at me as much as you want, but it's a Bitcoin-based indicator, so nothing has failed at that point. But could you imagine if Ethereum on a bad day hits 1390 again, but holds, and then that's it? Like, that would be crazy. That would be fucking crazy. Sorry, you didn't hear that. Man, that would be exciting. I don't need it to happen. That'd be pretty cool. Okay, I think I've talked enough. Hit me up with questions and comments either here on the video or on Discord, where we'll be tracking this thing a little more closely. I'm still on more or less my vacation from charts, which I said I was going to take once phase 3 late winter hit. I've had a lovely 3 weeks of it so far. I might have 3 more weeks of it, based on history. But I'm around. I respond to replies and happy to talk about this theory a little bit more. And then I will, like I did with the Living Cat Bounce, the LCB indicator, I'll post a quick video when the CSI fires off. I'll post one for the CSI part 1. I'll post one for the super trend part 2. And then in a few months, we'll talk about that late sort of indicator based on the EMAs. Although at that point, I'll have done a video about daily super trend stuff. So, okay, I'm rambling. Take it easy, guys. Be good to yourselves and to one another. Again, phase 3 late winter is the toughest part of the bear. People are angry. They're despondent. Prices are low and staying low. There's low volatility. There's bad news. Everything is falling apart. But that's usually where the bottoms form. So we have statistical, TA stuff telling us that the bottom's coming. There's also just checking in with yourself and being like, hey, I felt this way before. I know this sentiment. Bottoms form around here. So it's almost over, guys. Probably. Probabilistically. Statistically. Historically. It's probably almost over, guys. Okay. Take care. Peace.